With advanced social distancing measures, continued travel restrictions, and global economic uncertainty, Singapore is definitely looking at a recession, and it might end up being its worst on record.
The economy will likely dip into a full-year recession. In our estimates, we are looking at a contraction of 2.8%. A technical recession in the first half of this year is a given. Now, we can expect year-on-year decline, negative year-on-year growth figure throughout the fourth quarter this year.
DBS also warned that at least 24,500 people could lose their jobs this year, which is higher than the number reached during the 2009 global financial crisis. To cushion businesses and individuals and to save jobs, the Singapore government has announced 3 stimulus packages, amounting to about 42 billion US dollars, which is roughly 12% of the country's GDP. Meanwhile, if you look at the rest of Southeast Asia, the situation is equally grim. In its sharpest drop yet, DBS Bank economists have downgraded the region's average growth forecast to a mere 0.4%, a considerable fall from 4.5% last year.
Vietnam and Thailand would be most severely hit from the tourism perspective. In contrast, Singapore and Vietnam will be relatively more badly affected from the export front because both countries have exports to the GDP ratio of slightly more than 100%. I think global demands will be severely impacted. And likewise, global demand not just in terms of merchandise goods, but also in terms of tourists. I think to a large extent, the externally driven economies such as Singapore, Thailand, Malaysia, they will be the one that will be most badly affected.
A World Bank report warned of similar economic shocks, adding that these conditions could drive 11 million people into poverty in East Asia and the Pacific region. Already battling a severe drought, the fall in tourism and manufacturing could not have come at a worse time for Thailand.
Thailand is very badly affected by the collapse of tourism in the hospitality business because they've got a very large hospitality and tourism sector, which contributes about 16% of the gross domestic product, you see, so that's going to hit them very hard. With a large informal sector, lots of poor people, a lot of people without savings and financial resources to tide them over, it's going to be very important for governments to step in and spend and support incomes and relieve debt.
Economic activity picking up in China is seen as a big plus due to its strong trade and financial links with the region. A lot now depends on how soon the outbreak is controlled and how quickly life goes back to normal in Southeast Asia. Mirulu, CGTN, Singapore.